Today we're going to add two more accounting principles to the list we established last time. The realization and the matching principle. Life is made more complicated for accountants by the fact that generally accepted accounting principles require the use of accrual accounting and not cash accounting. Basically what accrual accounting means is that we record transactions not when the cash changes hands that relate to the transactions, but rather when the transaction occurs. Okay, so if, for example, I agree to sell merchandise to a customer for which he can pay me next month, that transaction gets recorded under GAAP not when he pays me next month, but when the transfer or the transaction takes place. And when a transaction takes place is really a legal question. Did an exchange legally take place? Does the customer now own the goods that I sold to him? Okay. If he does, I have to record a transaction. So the realization principle deals with when do we realize, when do we recognize revenues. And basically under the realization principle, we recognize revenues when they are realized. That is, when the exchange takes place, not when the settlement for the exchange occurs. Okay. The matching principle goes hand in hand with the realization principle. The matching principle relates to expense. It says, when do we recognize expense? We recognize expense in the period in which the revenue which that expense relates to was recognized. Okay, so we want to get the expenses in the same accounting period as the related revenues. Okay. Another way of saying that is that we also recognize expenses when they are incurred, not when they are paid for. So this gives rise to a variety of accounting issues. For example, when do we recognize the cost of a pension? Pension may not be paid out for 20, 30, 40 years. But what is the transaction that generates that pension? And the GAAP answer is that pension should be recorded while the employee is working for us. It's an element of salary expense, in other words. So every period we have to make an estimate of how much pension cost it was incurred by that employee for that period. This can become enormously complicated, as you may imagine. But the realization and matching principle are at the base of all accrual accounting.